Well, okay, spot gold is trading at $2,600 and change. Spot silver, I think, is at like $31 and change at the moment. Well, isn't that what they're worth? Do you really expect any kind of good price discovery from Wall Street? Because everything's been turned into a big trade. So let me show you how to determine how much gold and how much silver is its true. Look at global debt, because that's how money is created in this system. And this is fiat money versus sound money. They're both money. They're just the flip side of the coin. So with debt, which is how money's created currently, it's an unlimited amount, right? That's why every time there's a problem, central bankers go to their printing presses, because they can.
Good day, viewers, and welcome to the Economy Express channel, your go-to source for breaking insights on the markets and strategies to protect and grow your wealth. Warning, today's headline: spot prices of gold and silver, currently sitting at $2,600 and $31 per ounce. Might seem impressive, but Lynette Zang is here to tell us why those numbers are far from the true value of these precious metals. Investors, buckle up, because this analysis digs deep into what Wall Street and central banks don't want you to know.
And there are no limitations on that. Now, every time they do that, the purchasing power of the value of the currency goes down, but what do they care? They get to use it first when it has its most value. It's us, the public, that has to deal with everything else. But the global gold supply is finite. I don't care if they find a new discovery. Anytime anything is physical, there's going to be a limited amount of it. Anytime. So the fundamental value that I'm about to show you represents the true value of gold, the fundamental value of gold, on a 1-to-1 cover ratio, which means that this is how much it's really worth. When they do that overnight reset, I can't tell you what the cover ratio is going to be at that time, and nor can I tell you what the fundamental value of the gold is going to be at that time, because it depends on the level of debt that they've grown. But let's just stay with current, so we're dealing with facts. And the global debt at 313 trillion, not counting all the derivatives or all the other wonky products and complex products that Wall Street creates from it. So that's 313 trillion. And the global gold supply is almost 70, well, let's see, hundreds, thousands, millions, 7.498 billion ounces. That's it. And that means that the current fundamental value, which you've heard me say, and I know it sounds crazy, is over almost $42,000 an ounce. And the fundamental value of silver is 2,000. This is how you know that it's so severely undervalued, because they're going to hide it until they can't. And we've seen this happen over and over, even currently, in a whole bunch of currencies that are dealing with hyperinflation. So all you need to do to determine the true value of an ounce of gold for its most important function, which is to hold your purchasing power intact, is divide the debt by the gold. And that's how you get that 42 grand. And silver, remember, okay, is historically, when they did this is a 20th of an ounce. This is a full ounce of silver. So at a 21-to-1 ratio, that's how you get over $2,000 right now for the true value of silver. So can you see how severely undervalued it is? It will go to its fundamental value. I can't tell you exactly when, but I can tell you that it's happened over 4,800 times, 100% of the time. It's the way they attempt to get your confidence back. But this data then helps determine how much silver and how much gold do I really need to accomplish my goals. We're going to look at silver first, because this is such an interesting long-term chart. You always have to look long-term, because you can see anything short-term. But long-term, what we've got are two huge cups, right? Silver currently has not concluded this cup. This is what I keep talking about, that, well, maybe it's not going to happen by the end of this year, but it's working on it, and it's definitely happening. So it'll probably happen next year. But since this is a double cup, here's this one big cup, here's this next big cup. Once that breaks above that, can you see how silver is likely to go toward that $2,000? Because it works like a spring. I think I have a spring in here. I do.
According to Zang, gold's real value is a jaw-dropping $42,000 per ounce, while silver stands at $2,000. These figures aren't wild guesses. They're based on cold, hard math and economic fundamentals. Let's explore how she arrived at these numbers and, more importantly, what they mean for you. First, let's set the stage.
Works like a spring, and if you hold that spring down and you suppress it and you suppress it and you suppress it, when you remove your hand, it springs. In this case, if it breaks that top, it'll spring up. It's just what always happens. So this is a huge technical pattern, especially with two major cup formations. Are they showing you this? No, they're showing you short term. They don't want you to understand how to get into position to protect yourself. But this is why silver will absolutely go to its fundamental value once it crosses that line. And it's why you see in some currencies, or at first, that we could see that gold and silver ratio grow a bit more narrow. However, once we enter the hyperinflationary stage in earnest, we won't see that anymore. So the volume also, you can see how that is escalating. This is the volume of trading, right? It's become a huge trading instrument, and that's done with contracts. That's not really done with the physical metal itself. So how do you know this is a positive trend? What you see are higher and higher and higher lows. Here's a guarantee I can give you. If you keep getting higher and higher lows, you're going to get higher highs. It's not rocket science, it's just logic, and it always happens. We see cup formations here as well. Here's one, and we've recently had a breakout. So the long-term positive trend is escalating. It was slower here, it picked up steam here, it's picking up steam here, right? So the trend is getting faster and faster. We're going into a breakout. At the same time, that volume is escalating because even this volume over here is higher than the volume over there. But that's trading volume, right? We also know in the buying of the physical volume, that too is escalating. But this is what at this time guides those bullion prices, the kind that you can hold inside of an IRA, or even the kind of emergency gold, which I like the raw stuff for. Outside of the IRA, it's going to be guided by this market at this moment. That won't always be true. It hasn't always been true. But the premiums just get a lot wider, and we'll see that happening into the future because this is paper. They can create as much gold and silver that doesn't exist as they want to. But we all know that personally, I like these collectible coins, and this is by far the lion's share of my personal portfolio, though the raw gold is also part of my barterable portfolio, having a variety of sizes. But let's stay with the collectible coins. And I'm not talking about the very high expensive ones. I'm talking about, this is the collectible market. This level that I'm showing you here, which is the level that I prefer because I'm not spending $15 million on one coin. And let's take a look at some dates and how this has unfolded, because I'm just looking at what is most likely to happen. And number one, these coins are held privately. You can't do them inside of an IRA. Okay, so be clear on that. That gives me a level of comfort because it is in the category of a collectible. And therefore, since I believe that we are likely, or we certainly could see another overt confiscation, all of this inflation, taxation, all of that are forms of confiscation. They just don't say it that way because then you know what they're doing. And we don't want them. We don't want the public to understand what we're doing. But let me walk you through this chart. So this is where this market started back in 1970, and the index so an index is a whole bunch of coins, a whole bunch of these, right? put together. And that index started at 1,000. You can see that once gold was legalized to hold again, that we had a huge spike. We did that in spot market too, but more so in this market because this is a finite market, especially since in 1986, they standardized the grading of these coins. Up until that point, if I were a dealer, I could look at this kind of go, oh, I think this is a mid-state 65 and sell it to you that way. And maybe it was really a mid-state 61. So the whole industry was standardized and it really took off. And then, of course, you have this huge drop down. So what I'm showing you over here in 94, that's when you had the bottom of it, of that index at almost 47,000. This is the bottom dip right now. 2021 was the bottom that this index dipped to.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Zang highlights a key flaw in the modern monetary system: fiat currency. Unlike gold or silver, which are finite, fiat money can be created endlessly by central banks at the push of a button. This endless printing devalues the currency over time, eroding its purchasing power and transferring the cost of inflation to you. Yes, you, the everyday citizen and investor. Meanwhile, gold and silver stand tall as sound money, with their value rooted in their scarcity. Here's the big takeaway. While the global debt has ballooned to a staggering $313 trillion, the global gold supply is limited to just 7.49 billion ounces. Divide the debt by the gold supply, and you get the real fundamental value of gold, $42,000 per ounce. Silver, calculated on a similar basis, lands at $2,000. Now, you might be asking, if gold and silver are worth so much more, why aren't their prices higher? Zang explains that Wall Street has turned these metals into nothing more than trading instruments, using complex derivatives and contracts to manipulate their prices. This suppresses the real value, temporarily. History shows us that when markets reset or hyperinflation kicks in, these undervalued assets always revert to their true worth. This has happened over 4,800 times across various economies. Yes, 100% of the time. The question isn't if it will happen, it's when, and savvy investors know the time to prepare is before the reset hits. Let's talk silver, which is forming one of the most exciting technical patterns Zang has ever seen, a double cup formation. For those new to technical analysis, imagine pressing down on a spring. The harder you press, the more force it releases when your hand lifts. Silver is that spring. Once it breaks through key resistance levels, Zang predicts it will soar toward its $2,000 value. Historical charts support this projection, showing higher and higher lows, an unmistakable sign of an escalating trend. And the trading volume? It's off the charts, indicating growing interest and momentum. Now, let's get practical. Zang emphasizes the importance of holding physical gold and silver, not just contracts or ETFs. Why? Because when the market resets, the value of physical metals will far outpace their paper counterparts. For maximum diversification, she recommends a mix of bullion and collectible coins. Collectibles, in particular, have unique advantages. They're private, resistant to government confiscation, and often appreciate faster than standard bullion. Zang points out that collectible coin indexes have steadily climbed over the decades, with higher lows indicating a long-term upward trend. In fact, some coins have historically outperformed gold itself during periods of economic uncertainty. Here's where things get even more intriguing. Zang warns of a potential government reset, or even outright gold confiscation, similar to what happened during the Great Depression. If that happens, physical gold and silver may be the only assets left standing. And when the reset occurs, prices will skyrocket. This is why Zang advises positioning yourself now, while metals are still undervalued. As she says, there's no fever like gold fever. When confidence in fiat currency crumbles, demand for tangible assets will explode. So, what's the play here for investors? First, understand the math. Gold and silver's current prices are artificially suppressed, but can't stay that way forever. Second, act strategically. Accumulate physical metals in a variety of forms, bullion for liquidity and collectibles for added privacy and value. And third, stay informed. Watch for technical signals, such as silver's double cup breakout, and be ready to capitalize when the market turns. Remember, this isn't about speculation. It's about preservation, protecting your purchasing power in an increasingly unstable financial system. To all our investors watching today, this is your wake-up call. Gold and silver aren't just commodities. They're lifeboats in a sea of economic uncertainty. As Lynette Zang has shown, the math doesn't lie. The debt is growing, fiat currency is losing value, and precious metals remain the ultimate hedge. The question is, will you act before the reset, or after it's too late? Stay tuned to the Economy Express channel for more insights, and as always, stay ahead of the curve.